pick up on that point. I mean, Wes said, when the act has come, first thing in preparation is look for the soft spots, and we all know there are soft spots. The question is, and maybe to your point, Paul, that in terms of holding management to account, that looking at that SWOT analysis, the weaknesses, it's not, the boards are not owning up to that. That there's a little too much friendliness, or perhaps just a blind spot because the board picked the CEO, so how could the CEO be wrong? But how big of an issue is that the boards and holding to account? I think you alluded to that, Andre. Perhaps maybe your thoughts on that.
Well, I think it's we were talking about stuff that we can import from the public, the party model to the private equity. I think Paul is absolutely right. The key at CP was having the right CEO, and I think it's true of any investment that we're making, whether public or private. And we need, when I said that ease and speed of execution, I think that it's much easier to do it in a private context. And even though, and probably all of the investment recommendation I've seen in my career on private equity company and transaction, we said, we support this management team. In 80% of the time, the CEO has been changed in the first 2 years. And bringing the right people for the right task.
So making those kind of decisions. There is another point you made, Paul, and I want to bring up, because when everyone gets into the discussion of long-term versus short-term, of course, they automatically go to quarterly earnings. And this focus on the quarterly earnings and giving guidance, and this is the problem. We need to move away from it. You seem to have a slightly different view on that. So maybe some other views around, because there's a big feeling about the sins of quarterly reporting.
To me, quarterly reporting is simply a check along the way to a long-term goal that's clearly understood and articulated, and that the shareholders buy into. So, as I said, from a management point of view, as a CEO, I want to know stuff weekly. So I think it's pretty fair to tell the owners that here's how we're doing quarter to quarter. The issue is do we understand some variations in that as the nature of the business, and do the shareholders, the owners of the company, and all the other opinion makers, and this is this media stuff that's out there that everybody's got 2 cents worth. Most of it is all baloney. They don't understand really what's going on. And it's to fight your way through this haze of stuff to focus on what's really important. And it's what you measure, that classic case, what you measure. And are we looking at what we need to know when we need to know it? And is that information accurate and timely, universally understood, and most of all, actionable?
I don't, from my perspective, I don't believe all companies should report on a quarterly basis, okay? Because, first of all, some companies they have lumpy earnings. And unfortunately, you would think that all their investors should know that. I do a lot of my work in the wintertime, so as a result of that quarter is going to be bad. But a lot of investors don't know that. And the problem is that the company would get punished as a result of having like a bad quarter. And if you're thinking long term, there's one thing when you're the owner of the company talking to management every day about the business you own. But when you look at the moms and pops out there and they're getting this information on a quarterly basis, they're not reading the financials the right way. In fact, they can't even read a financial statement. Then you're going to find that you're going to have disruption in your business when it's just interested parties interpreting the information that you put out there, and all you see is a headline that says, this company missed a quarter by this percentage, without having the context as to why they missed a quarter the way that they did. So I think that if you're thinking long term, it's really tough to report, for all companies to report on a quarterly basis, because it just by nature, telling people every quarter this is what I've done as a business, it's by nature, in my view, short term.
So let me put something out. So maybe it's not so much quarterly reporting, it's what is currently focused on and reported at the quarters. There is a lot of time spent on financial information. There's a lot of work to put out quarterly financial statements. God knows the effort that goes into that, to the review of the board. So the question is, maybe it's a different lens that you need to look at and different information that should be put out. So, yes, there's some financial indicators, but what about other things that might perhaps actually connect to your strategy and spending time talking about that? I think that's where some of the direction, but David, your reaction to that?
Well, yeah, I think, Don, if we had simpler accounting rules, it would be foreshorten a lot of quarterly earnings statements. And if we had more time available, perhaps we then could go on to strategy. But people try to understand your statements. I'm on one public company board where our published earnings per share would be minus 20 cents. And then our adjusted earnings per share, which is what we do as a board to actually say, what does this really mean about our business, is plus $1.50. It takes a long time to explain why the accountants say we're losing 20 cents a share, and while the management team and the board say we're made $1.50 a share. So that might be one thing to think about. On the other hand, I don't like quarterly forecasts because I do think it exacerbates the human tendency to be only looking forward. I do ascribe, though, to the notion that the series, long term is made up of a series of short terms, and if you're not going to make one short term, you're not going to make the long term. So I think John Maynard Keynes taught us that 50, 100 years ago. So I do think having quarterly reporting is not bad. I just am not in favor of quarterly forecasting because I think that emphasizes Wes's point that the human behavior will probably follow the incentives.
The accounting issues aside, that's
Yes.
another major session to talk about. But the point of, are there some other metrics that could be reported on that would be helpful, that would tie to the strategy and getting the story out? To me, one thing is, EPS, that's value realization, but what about the value creation side? Back to this, innovation, how much innovation is taking place, et cetera. How about those kind of things?
Relative market shares in the grocery industry, as Loblaw is now at 39% versus 33%, and what happened to Sobeys? Those are good performance metrics that are regularly reported on by a lot of analysts. So I think there's a lot of stuff out there for people who have the time to do the due diligence to work out the success or not of the business.
And I think the mistake that people make sometimes is to tie those successes in business to performance in the share price. Because there's times when you hit the ball in the park and the stock didn't move.
Yeah.
Right? I think you have, Paul, you have an example of that, right? You blew your brains out to do this deal, to sell this division, or to make this much in share, and the stock just did nothing. In fact, the stock goes down. Right? So there's times, and again, in my opinion, that's a part of the lack of communication to the street.
I totally agree
because
with that.
the street just didn't get how important of a milestone that is for your business, and if they don't get it, that you're relying on other people to interpret it for you, who generally interpret it incorrectly.
Just referring to what Wes was talking about, that a transaction was done, and we woke up in the morning and expecting hallelujah hit the stock market. Stock didn't move a penny, and we just could not figure it out. And it turned out really that we did not know the shareholder base that we had, and in fact some people loved it and other people didn't. And we were expecting, from our perspective, it was going to be great. And I still view the decision of the board to be the proper one, but the communication factor was not well done.
So there's a theme there. It's the communication factor and those other metrics that they're important.
But we have to be careful of management's first line of defense, which is, they didn't understand it, as opposed to maybe we didn't communicate.
Okay, good contrary view. I now need to get you working again, and so here's a question to you, the audience. How important is shareholder engagement for boards?